2020 has not been a good year for the oil industry. Because of the global coronavirus pandemic, commerce is at a standstill. Billions of commuters are staying home, and airlines are essentially paralyzed. Demand for oil is in freefall. Before the outbreak, the world was consuming around 100 million barrels a day of oil. It is estimated that demand will drop by 12 million barrels a day in the first quarter of 2020. To put that into perspective, during the 2008 financial crisis, demand dropped close to 5 million barrels a day. If that weren't enough, a price war between Russia and Saudi Arabia hurt the oil market even further. As demand dropped due to the virus, the 13 member states of OPEC, which account for almost 80% of global oil reserves, agreed to cut production to keep prices stable. Russia, now part of a broader alliance called OPEC Plus, initially refused to cut production deeper and for longer. Saudi Arabia reacted by ramping up its output, kicking off a price war. Oil prices plummeted and dragged down global stock markets with them. In April, after Donald Trump intervened, Russia and Saudi Arabia called off their brutal price war. To reduce the mushrooming global oil surplus, OPEC Plus agreed to cut production by over 2 billion barrels until the end of 2020. It remains to be seen whether the decision is too little, too late. None of this is good for American oil producers. Under the Trump presidency, the U.S. oil market has boomed, taking advantage of production curbs by OPEC+. In 2019, the U.S. became the top producer of oil, extracting nearly 13 million barrels a day after a huge shale boom. Dozens of small and mid-sized U.S. oil companies are now facing bankruptcy. The end isn't in sight. When the world comes back online after the coronavirus, demand is likely to surge, causing further volatility. We just don't know when or how strong the recovery will be.